Chamath Palihapitiya, one of Tesla's most prominent bulls, ended up selling all his Tesla stock. This shocked quite a number of people as this move was quite unexpected. Despite holding a strong position in Tesla's stock, Palihapitiya took part in this sell-off a few months after a positive projection for the company. In an interview, Palihapitiya revealed that he had sold all his Tesla shares and why he sold them, despite believing the brand has a bright future. What was the reason behind this unexpected move? Is he still bullish on Tesla? Keep watching to find out. Chamath Palihapitiya was very vocal in his support of Tesla. He said several times that he was betting on Tesla's CEO Elon Musk since he considered him a close friend of his. Many knew Palihapitiya would be a reliable investor who would not risk his money only to please a friend. The seasoned financial analyst appeared to believe in Tesla's ideals and believed that the company was on its way to exceeding expectations. So why exactly did he sell his stocks? The founder and CEO of Social Capital said he sold his stake in the Elon Musk-led electric vehicle startup since the high pricing allowed him to fund his other ventures. I don't have an endless supply of cash, so when I have these ideas, I have to find a way to fund them. Palihapitiya spoke up about this at CNBC's Delivering Alpha conference. In his words, "I'm not a fundraiser. I'm unable to visit other folks. As a result, when I have these ideas, I need to find a way to fund them." Continuing, he said, "The only other option would be for me to completely overextend myself, and that's a danger I'm not willing to take." We find this a bit odd, as many did and still do. For one thing, buying and selling stocks is nothing new in the business of investing. What's suspicious is that he sold all of his Tesla stock. It's interesting to believe in a brand as passionately as he did strongly and not have a stake in it as an investor. What's interesting is that earlier that year, he specifically advised investors to hold on to stock, saying, "Do not sell any stock." He went on to say that he expects the stock to double or triple in value. Last year, Tesla was a big stock market winner, hitting milestone after milestone as it made its way to the S&P 500 index, capping off a strong year for growth stocks. The stock increased by 743% in 2020 alone. It's been a while since it's seen such growth levels, and some believe Palihapitiya lost faith in the brand's stock and wanted out. The billionaire said he's interested in hypergrowth companies, those that grow at a rate of more than 50% a year, cash-generating assets, and other assets like Bitcoin and Solana. While Palihapitiya stated that he's still positive about Tesla, he says his thesis has slightly shifted. He admits that he totally misjudged the size of the electric vehicle industry. "The market has shifted today," he added, referring to automakers such as Ford and General Motors racing to electrify their fleets. "I genuinely believe Tesla will be quite busy just being a best-in-class electric vehicle car company at this point." That sounds like a roundabout way of saying he believes that since other automobile companies are jumping on the electric vehicle trend, Tesla doesn't stand a chance of achieving high growth levels anymore, doesn't it? And that's where he's wrong. Palihapitiya's selling can be viewed in the most compassionate light as a man on a mission to change the world, and he should do so if he can find a better way to reinvest the money at high rates of return. The most cynical interpretation is that he was a promoter who built a public image that allowed him to buy shares at a low price, raise the price in public markets, and then sell it to the public and pocket the gains. Stock selling aside, everything he said about Tesla when he was bullish still stands. When asked, he said that what he finds most appealing about the brand is that Tesla is first and foremost a distributed energy firm, a notion Musk has already expressed. In a 2016 interview, Musk said, "People think of Tesla as an electric car company, but Tesla's entire aim is to speed the advent of sustainable energy." And this is still relevant. The company is constantly working on this through constant innovation and great speed that continues to surprise investors. Tesla is dead set on making the renewable energy transition a reality. Tesla is the top pure-play electric vehicle manufacturer. Others exist in the field, but Tesla has long been the benchmark. And it's truly profitable at this point, with positive earnings in each of the last 5 quarters. The major distinction between Tesla and legacy original equipment manufacturers is that they are primarily attempting to balance the transition from gasoline to electricity, while Tesla isn't required to do so. Tesla, meanwhile, is also involved in solar power and battery technology in addition to automobiles. As renewable energy technology becomes more mainstream, there are greater expansion opportunities, and it already has a large and loyal client base to which it may offer other products. For those with an ESG bent, Tesla appears to be a much bigger play on the clean energy industry in the future. Another important factor to note is that Tesla has a lot of room for expansion. With a visionary CEO at the head, a hyper-focus on a burgeoning industry sector, that description has a lot to enjoy in it. What's more interesting is that assuming Tesla can maintain its industry cachet, it has a lot of room to catch up to older competitors that just don't have the same image. Yes, legacy car companies such as Ford and General Motors want to expand their electric car operations, but their dominance in the gasoline-powered vehicle sector doesn't necessarily offer them an advantage in the electric car market, where Tesla's name is frequently spoken. The electric playing field is indeed much more level, and Tesla has already demonstrated that it can compete effectively with the industry's largest automakers. Tesla is expected to release profits for the fiscal quarter ending in March 2022 after the market closes on April 20, 2022. Investors are eager to see the figures after rumors of higher deliveries and profits spread widely. It's true that the last earnings call did nothing to improve the stock, but there were bigger powers at play then. Experts expected the stock to soar in value after the astonishing fourth quarter report of 2021, but it instead fell much lower. Investors began selling their equities in anticipation of the Federal Reserve's scheduled rate hike, which they worried would drive the stock's value even further. But to be honest, it's been a rough year so far for all equities, especially growth stocks, and most estimates are wobbly at best. However, the brand has achieved so many new milestones since Palihapitiya sold its stock, and it hasn't been very long. For one, the brand is back to being a trillion-dollar company. Secondly, Tesla has been vigorously working on its expansion plans. Several analysts say sequential growth will go up much more later this year, particularly in the second half of 2022. Production at the company's German location has already begun. Tesla's new factory in Texas may begin production in a couple of months. Drew Baglino, Tesla's senior vice president of powertrain and energy engineering, said the company was making great progress on the ramp curve in Kato, where a prototype line is currently producing 4680 cells. As a result, the Tesla Model Y will be the company's first vehicle with a structural battery pack. Giga Texas will also build the Cybertruck electric pickup and semi-electric truck in the future. At the same time, no firm production start dates have been specified for any of these vehicles. Tesla forecasts that vehicle deliveries in 2022 will climb by more than 50% year over year, despite long-standing supply chain challenges that it does not expect to be resolved in the following year. When Elon Musk, speaking on the behalf of the world's most valuable automaker, gave an enthusiastic outlook after the company recorded record quarterly sales that surpassed Wall Street projections, skeptics were baffled, but Tesla bulls remained confident. When market emotion and psychology are taken into account, everything appears to be going well so far. Tesla's worth will surely rise as the company continues to dominate numerous areas, and it will eventually surpass current predictions. While the growth may not be as fast as investors like Palihapitiya would prefer, it's important to remember that the electric vehicle race is a marathon, not a sprint. It's best you play the long game. Why do you think Palihapitiya sold his stocks? Do you think he made a mistake by selling them? Comment down below.